In this example, we're going to look at the preparation of reversing entries. So reversing entries are kind of like what they sound like. They're entries that you're going to do backwards from what you did before. So I want to point out the use of your ebook is very helpful when working on assignments because it can take you directly to the part of the book that will help you with the assignment that you're trying to complete. So quickly, before we actually look at the assignment, we're going to look at what this brings us to. It brings us to reversing entries. So the first thing I want to point out is reversing entries are only done on accrued revenues and accrued expenses. So previously, you've done some assignments where you've talked about what is a deferral and what is an accrual, and there were some printouts I hope you took the opportunity to look at to help further explain the difference between the two. So in looking at reversing entries, it's an optional journal entry. It doesn't have to be completed. The purpose is to make the accounting bookkeeping portion a little bit easier for the accountants. Now, adjusting entries and closing entries we've previously completed were always done on the last day of accounting period. Reversing entries are done on the first day of an accounting period. So what we're looking at here, a reversing entry is going to be done on an adjusting entry. You're going to take an adjusting entry and you're going to reverse it. So this example shows we had an adjusting entry for wages that had accrued but not yet been paid. So we had to debit wages expense for the $720 because the matching rule in accrual accounting tells us that our expenses must be recorded in the accounting period that they are incurred, and then we credited wages payable because we weren't paying them yet. We weren't going to pay them till the next accounting period. And that was done on July 31st. So the reversing entry for this, because it's an accrual, would be to do the opposite. We would debit wages payable and credit wages expense, which is shown further down the page somewhere. Right here. So here would be our reversing entry. Debit wages payable and credit wages expense. So you're just reversing an adjustment that you previously made. So in this example, we have indicated by letter the adjusting entries that we've made for the end of the month. So we adjusted prepaid insurance, we adjusted salaries expense, and we adjusted depreciation expense. So we have to determine which of those entries were actually accruals. So the easiest way to determine between a deferral and accrual is to ask if cash has traded hands first. So prepaid insurance, for example, we had to spend cash to buy prepaid insurance, so that's a deferral. Accumulated depreciation on the office equipment, we had to spend cash to buy the equipment, so that's a deferral. Salaries expense, however, salaries payable, salaries expense, we haven't paid them their salary yet. So no cash has traded hands. So that is an example of accrual, and that's the transaction that we can reverse. So again, reversing entries are done on the first day of the accounting period. So we have April 1st, and we're going to reverse the adjusting entry for C. So since we credited salaries payable, reversing means to do the opposite. We're going to debit salaries payable in the amount of $360. And then since we debited salaries expense, we're now going to credit salaries expense in the amount of $360. So again, reversing entries, you can make them very complicated. They don't have to be completed. It's a personal preference for accountants if they choose to do so, and keep in mind they can only be done for accrual adjustments.